Hello, good evening, ladies and gentlemen, traders and investors. Alex here from MarketWise Asia. Thank you for watching this Facebook Live and also YouTube live stream over there. Okay, first of all, just want to say a good night to my girl, Janie. So go and sleep, okay, Janie? Okay, and if you can hear me loud and clear, please say a hi to me in the comments or in the chat box. Okay, I won't bite. I'm very friendly. Okay, so good to see every one of you here once again. So tonight it is still young. Okay, so it's just 10:30 p.m. only. So let me take a look at the comments right now. Say hi to me, okay? Wai Lam, okay, thanks for the BTC call in the SVI. Okay, later I'll go through again. In fact, I not only mentioned BTC in the SVI, I also did share, I think, last week on Bitcoin as well. Okay. And while I'm saying some of the SVI stock categories also looking good. Yeah, okay so far. Okay. All right. So Sun, great. Okay, Mark, Dave, good evening, everyone. So let's wait for a little bit more people to come in first. Okay, William, Lin, okay, good to see everyone over here. So the weather today is actually a bit cold, right? Chilling, right? So morning it started to rain really heavily. Sending my girl to school was a bit of a headache. I mean that it is inconvenient. I mean that raining so heavily, just everything just slow down. Everything just is inconvenient. Okay, and after that the weather is like kind of a cold, chilling. Drizzling, rainy the whole day. Okay, and I'm still switching on my aircon right now. I still feel a bit cold right now. Okay, so Ng Eng, Pei Wen, Jin Yo. Okay, good to see everyone over here. So let me share my screen right now. So this is the one over there. So as usual, a disclaimer first. Whatever I share today, it is just for education purpose, not a recommendation to tell you what to buy or what to sell. So please do your own due diligence. Okay. And yeah, before I get started, okay, if you could, okay, please give me a like, share, or comments. And if you could really just share it out. Okay, if you're watching this on YouTube, you can share it out. Watching this on Facebook, I can share it out as well. And just give me subscribe to our YouTube channel. Okay, so these are our social media channel. So please subscribe, follow, and like if you can. If you have everything, okay, let me just post it in the comments right now. Hello, Hadley. And let's kickstart this session right now. So once again, I should be able to finish everything within 1 hour. So nowadays, I try to finish within 1 hour. The key thing is, okay, I share good stuff, okay, not, a lot of fluff and then, talk for 1 hour, 2 hours, that kind of thing now, okay, all right. So the economic data for this week. So let's kickstart this session right now. Okay, the economic data. I should remove this. Okay, so back to the Forex Factory once again. Hello, Kelly. Okay, so this is the Forex Factory. So for this coming week, no, sorry, should be 14. Okay, I did not update this. Okay, 14th of October for this week. This week, actually not much so-called fundamental news or any other breaking news. Okay, so it's the Thursday, the retail sales, then the unemployment claim. Not so much for this week. Okay, but yeah, okay, so for this week, just to let you know, this week it is actually the options expiry date. Okay, options expiry date. So this is the OPEX 2024. I think I shared quite a number of times previously. So in case you are new to me or MarketWise Asia, I'll just repost it in the link in the comments. So you can see over there right now, this month it is October. Time flies, like I just did like very fast, like October. Then suddenly it's like we are heading into the mid of October already. Okay, so this is the, maybe you can still try to zoom in a little bit bigger over there. Okay, so October, the 18th of October, this coming Friday, it is the OPEX, the options expiry. Okay, and typically if the market it is in an uptrend, the market tends to go gravitating towards higher side. Okay, when it is inching towards the OPEX. Okay, and to also the where's the VIX? VIX, just to let you know, the VIX options expiry is on the 16th. So sometimes there could be some volatility, okay, when the VIX expire. So that is on the Wednesday. Can you see this green shaded one? So the green shaded one here, it is the VIX options standard expiry. Okay, so I'll once again later I'll go through the indices and also some of these trade ideas that I might share with you guys later. But let's go through some of these so-called the news this week, okay, and what is going to happen since the 2-year bull market. So for those who might not be aware, okay, right now at this point in time, in fact, it was 13, if I'm not mistaken, 13th of October yesterday, okay, was the second year of the bull market since 2022 market crash or the market low. So 2022, it was a bear market. I think most of you should know, right? I don't think you are so new that you don't know that it is a bear market. Okay, so if you guys still remember the 2022 bear market, right? Just type 2022. Hello, Mary. Hello, Christina. So if you still remember that 2022 was the bear market, okay, type 2022 in the chat box or in the comments. Okay, I know some of you guys just entered the market maybe during COVID time. At least I know right now. Okay, I've been chatting with Wai Lam, right? So he actually entered into the market only in 2020. Okay, so not I mean that's a number of years, but you know, not more than 10 years, that kind of thing now. Okay, all right. So second year 2022. So yeah. So if you remember, 2020 was the COVID pandemic, right? People were expecting a crash. Yes, it did crash. It dropped 30% really, really fast in just a few days' time. Okay, like 1 or 2 weeks, right? Okay. I'm not sure if you remember. Like one day can drop. I'm not sure. I think it's like one day can drop 8%, 9%, that kind of thing. Okay. I've never seen that in my whole trading life since 2011. That was the first time. Okay. So after it crashed spectacularly, it also did a V-shaped recovery very, very fast. Okay. So after that, 2020 was a bull market. 2021 was also a bull market leading, okay, by all these growth stocks and the tech stocks. I think many of you might have memory. Some might have painful memories because, you know, you guys, just deep inside it because hearing people say about, those super stocks lah, what growth stocks lah, growth is the only way lah, that kind of thing, okay? But doesn't matter. I mean, that whether if you lost some money, I mean, that it was a good experience I think, for many people, okay, including myself also. So I've never seen such a market drop in my life, okay, even though I've been in the market since 2011, okay. So 2020, 2021, 2022, okay, until 2023, okay, it was a fantastic 4 years, okay, 2020, 21, 2023, okay, because it actually speed up the whole process of the bull market and the bear market cycle. So for those who remember, okay, the so-called the last great financial crisis was actually in 2008. Okay, after that it took quite a while, until 2020, okay. So it was in a way like drifting higher all the way, okay, until 2020. Then there was a sudden crash, okay. And during this period, I would say that it was like a decade of like a lost year for the S&P. It did go higher, but it wasn't very spectacular. So there were a few years like the market was just grinding, sideways. I'm not sure whether you remember. It was good if you do mean reversion trade lah. Okay, yeah. So Mary say easy money at that time. It was if you actually caught it and managed to exit just in time and not so greedy. So like Christina say, it was a painful time. As I mentioned, don't worry, okay. It was a very good experience. By right, if you went through this so-called painful experience, right, you should have up another level, elevate your trading level to the next level, really, because you'll be understanding all the fear and the greed kind of situation. Okay. All right. So I just let you know, second year into bull market since 2022 low. So we are 60% gain. The stock return has a 60% gain since the 2022 low. Do you feel like it's 60% gain or not? Okay, 60% is quite fantastic for a 2-year gain. So average about 30%. Okay, so maybe you don't feel like, hey, it is like a 60% gain, but you actually take a look at the S&P 500, right? S&P 500, okay? So if you go back to 2020, I do a naked chart first, okay? I love naked, okay? 2022, so over here, okay? So this was the 2022 stock market crash or a bear market. So do you see over there? This is the exact low over here. This was the exact low. So it's 13th of October. 13th of October. So we are officially just 2 years into this bull market. Okay. So this bull market, in fact, it is to me, it is still pretty new. So it's just 2 years into it. Later I'll explain why it is still new, or what we call a nascent. Okay, NASCENT. So in case you don't know, okay, I know some of you don't know this word because previously I also don't know this word. So nascent meaning okay, just coming into existence and beginning to display signs of future potential. So this is to me like the stock market is second year. It is like the nascent trend. So if you learn something new today, a vocab, okay, just type letter N in the comments. So this is a nascent trend, nascent uptrend, nascent bull market. Okay, display signs of future potential. Okay, I think many of you guys wouldn't have known this word. Okay, be true to yourself. Okay, if you don't know this word, just type N in this in the comments. I learned these Queen English words. Okay, so second, so yeah, so 60% gain since the low. So in fact, if you think it is actually high at 60% gain since the low, we are just right in line with the historical average going back to 1957. Okay, some knowledge, okay, for you guys. Okay, so this is this one. Okay, the S&P return in the first 2 years of a bull market. So for example, right, 2022 was the end of the bear market. So 2022, this one, right, 2022 is end of bear market. So 2 years into it, okay, which means that 2020 was the bear market over, then 2 years into it. You can see that after the pandemic was over, right, after 2 years into the new bull market, it was actually 93% up. Of course, this is quite spectacular. It is extraordinary. It doesn't repeat every single year. Okay. But of course, the previous one, also a very spectacular bear market in 2009. So 2009 in March, 2009 March, I'm not sure how many of you can remember 2009年 the global financial crisis. I think March was the low. Okay, after 2 years into it, it also rallied 93%. Okay, but these are not so normal. The normal since 1957, the average on 40 plus, 50 plus, 60 plus, 40 plus, 50 plus, 60 plus, 40 plus, 50 plus, 60 plus, blah, 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 blah. Okay, so it's average. Okay, average, we are there about at 55 to 60%. So we are right smack into an average. So it is not really high. It is just about there. Average, it is what the market is expected to do, okay, based on historical data going back to 1957. So we are just right, okay, into these 2 years into the bull market with about 60% gain. Okay, all right. So what's next? Okay, so the average duration for a bull market, okay, it typically about 5 years lah. So this is based on the 11 bull market, okay, and 8 out of the 11 make it to the end of third year. Okay, so majority of the bull market can at least, okay, exist until the third year. So right now we are only into the second year. Okay, so again, it doesn't mean that the market can go up 100% into next year or next year, but we are just stating the historical facts based on historical data that typically, okay, 80% of the bull market, you at least make it to year 3. So right now we are sort of still in the early or middle phase. If okay, we assume that typically average the bull market it is about 5 years. So judging from this, okay, we still have maybe I don't know at least 2 years to go, that kind of thing. Okay, but of course, at every point in time there will be always perma bear, perma bear. Okay, they say that oh the market is going to crash, the market is going to crash. This time around is the worst in the human history. Okay, who's the first person that comes to your mind when you hear this kind of perma bear? Okay, I think the number one, I think I can at least for me to have this kind of permanent impression is actually Robert Kiyosaki. Ever since I'm in the market, like since 2011, it's every year is like, the market is going to crash, the market is going to crash. Okay. If you actually listen to him, you might miss out a lot of opportunities. Okay. Not saying that you might lose a lot of money, but you might miss out a lot of opportunity because you're always scared that, the market is going to crash. I'm not saying that, he's good or bad, but, it is just the way I think, it attract attention. Okay, I can't blame him because he's an author, investor, whatever it is. You want attraction, you want marketing, then he has to do this kind of thing. Because selling bear porn, it is more sexy than selling bull market kind of story. Okay, I'm not sure whether you agree or not. People always want, he's the person who actually predict the bear market. He's the genius. The economist predicted the bear market. Is a genius kind of thing. Okay. Anyway, all right. So back to fundamentals. So in order for the market can continue to go higher, okay, we always have to rely on back to the fundamentals of the market. Okay. Even though I am doing technical trading, I'm a technical analyst, I trade the market, okay, right? But eventually, okay, the market has to follow the fundamentals, okay, whether it is that the economy is growing, there's a growth, or whether, of course, in recent months, this is going to be the story that the interest rate, okay, whether there's a rate cut rate hike, whether there's going to push the economy higher or so, okay, and of course it is the company's earning, whether their earnings are profit and such, okay. This is very important. So whether the S&P can continue to go higher a lot will be depending on whether the company itself, okay, can continue to generate more revenue and profit as well. Okay, let me try to share this data with you guys. Okay, I think I forget to share this one with you just now. Okay, let me just share this. Okay, so this is the strength and the length of the bull market. So do you see this extraordinary brown line over there? Okay, this is actually what I mentioned just now. Okay, since 2009 to 2020, the global financial crisis, okay, until 2020, okay, yeah, it was a very stretch of a long bull market. Of course, along the way, there are some dips, but not really in a way crash, not in a way crash, okay? Let me delete this comment, okay? All right, so this is the strength and length of the bull market. So yeah, other than that, we can see that typically, it's like 3 years to 5 years, that kind of thing. Okay, right now we are this red line over there. We are just like second year into the bull market. Okay, all right. So this is the market so far, and what I wanted to show you, what did I show? See image. It is the earnings. Okay, so did I share this? Did not find this? I shared this really just now. It is the I didn't get the data, but never mind. So let me try to show this once again. Okay, so and okay, yeah, this is the one. The estimated GDP growth into 2025, as I mentioned, the fundamental, okay, the growth, whether the market can continue to hit higher. Hopefully so, okay. It is depending on the US economy as well. Okay, so you can see that the so-called the expected, okay, the projected range, okay, heading into 2025, the GDP growth, okay, the government, it is still expecting to be positive, but lesser than the previous years. So it's about 2%. So they are estimating about, 1.8, 1.9. So they're about within the next few quarters or so, having a growth of about 2% per quarter of the US economy. But again, of course, right now, I think a number of weeks ago, 1 month ago, there was a fear of the recession and such. Okay, of course, as of now, right now, I feel that based on the data, again, you can say that the data is being manipulated or what. Okay, could be. Okay, but as of what the data it is showing, okay, the unemployment rate, the unemployment claims, non-farm payroll, and all these are credit card and all these, okay, houses, property. So far, I think it is still okay, not a cause of concern yet. Not a cause of concern yet. Again, there'll be always naysayers saying that, it's a manipulated data a recession coming soon. It could be but again, I just assume that what the government and the Fed, the data, I just assume that it is truth. It is true. Okay, so this is the estimate over there. And earning, as I mentioned about the earnings and the market leadership, whether there's a real company growth in terms of revenue and the profits, right? So during this 60% gain, right? Okay, I think part of it, okay, this is what from I read, okay, this is what I read also, okay, it is based on the growth in the corporate earnings, okay. The companies must grow, okay, must increase their profits and revenue, then the market can go higher. And of course, plus the valuation expansion, okay. This sounds like a very cheap word, but basically, valuation expansion just means that the price that you guys, the investors, are willing to pay for a company stock relatively to its earnings or other fundamental data. And typically, the valuation, okay, the simplest form, it is by PE ratio, okay, price to earnings ratio, okay. In other words, okay, investors are willing to pay a higher price, okay, relative to its real earnings. So, because the bull market, investors are willing to pay higher price, they chase, willing to pay higher price, they chase the company, okay. Yeah, so market gains are consistent with the average bull market, okay. But this year, okay, the leadership is a little bit unique. So what do I mean by that? Okay, typically, okay, the smaller company or the mid-cap company will outperform the big cap company. But I think this is the first time, okay, in 11 bull markets that the S&P equal weight meaning the RSP, okay, RSP has underperformed the market cap weighted index, okay. And this is because, growth stocks driven by the AI hype has significantly, okay, outperformed value stocks. Okay, so a lot of these small cap, mid cap are so-called value stocks. But of course, in recent 1 or 2 years, okay, we are driven by the AI hype, and all this AI hype, okay, the leaders are usually the very big cap company, like Nvidia, Microsoft, Amazon, that kind of things. So they are typically growth stocks. Okay, and small cap stock has seen less than half the typical gains at the start of the bull market. So what do I mean by that? I say so many things. A lot of text. Okay, I will just show you this chart, and you realize what I mean by that. Okay, what I mean by that. Okay, so this is what I meant by this. Okay, typically, okay, in the first 2 years of the bull market, okay, typically the dark blue is the S&P, the normal S&P, the market weighted S&P, okay, and the light blue is the equal weight S&P, RSP. Okay, typically the equal weight S&P will outperform the normal S&P. You can see that, since 1974, okay, at least from what the data that I have, okay, 1982, all has been outperforming, okay, and especially after the global financial crisis, okay, the small cap and the mid cap actually outperform the big cap. Okay, but this is the first time, okay, since 1974, the past 11 years bull market, that the equal weight, the smaller cap and the mid cap has actually underperformed the big cap companies. So right now, can you see that don't be mistaken, okay, the equal weight, it is still performing well, but it's just underperforming relatively to the S&P, okay, the normal S&P. So right now 60%, right, but the RSP only 44%. Okay, understand so far from what I mentioned? Okay, all these things that makes you some give you some good knowledge. If you understand what I'm trying to say, just type yes in the comments or type okay lah. Okay, just type okay in the comments. Okay, some good information for you to take away. So you can go and tell your friends that, hey, I learned something from Alex from MarketWise Asia, a lot of good knowledge, huh? Okay. All right. So if you find this information useful, okay, I really appreciate that if you can share it to your friends. Okay, share it to your friends. Okay. If you're on YouTube, give me a like and also subscribe and also share. If you're on Facebook, give me a like also. Okay, and also subscribe as well. Okay, especially if you haven't subscribed to MarketWise Asia Facebook page, huh? So far, right now, we have about 150 people in the room, but I only got 16 likes or 16 love day. Can you give me some love or not? Okay, whether you can also give me angry face if you don't like me. I'm okay. I'm okay also. Okay, you don't like me, give angry face also song. Okay. So at least I know that you are around. Anyway, so let me continue over there now. So what I mentioned. So yeah, so I covered quite a bit. So all these are again just for your knowledge and so called yeah, just for knowledge lah. At least you know what's happening in the market. Okay, but again, all this is just knowledge. Unless you just buy and hold the S&P, okay, it is not actionable. I think I say many times already. A lot of things I say, okay, sounds good, but not actionable. So these are the things that sounds good, makes you very knowledgeable, but it doesn't have so-called actionable. Okay, so previously, okay, I think I mentioned about election day. So we are pretty close to the yeah, Feng Rui say angry face. I like it. Angry face, my friend. Okay, so yeah. So let me go through the S&P chart right now. Okay, let me go through the S&P chart right now. Okay, so this is the S&P cash index. Cash index. Okay. So in case you are not aware, so typically I like to see what is the zero gamma level. Let me just remove all the data first. So something not new. If you have watched my live, I kept mentioning this quite a bit. So from the spot gamma over there, okay, spot gamma, the gamma exposure. I think if you guys are so-called listen to me every week, you should know already. Okay. Anyway, so you can see that this zero gamma level, it is at about 5775. Just before 5008. Okay, just a little bit lesser than 5008. So you can see that let's assume that the gamma level, the zero gamma level is about 5775. So again, this is at a bull bear zone or volatility zone. Okay. If price can stay above 5775, then I think so far so good. Okay. If price really does break below this 5775, okay, then we can expect more volatility to come, which means that there could be more correction to come now. Okay, so 5775, the zero gamma level, and if you add in the usual my cloud and the central pivot range, you can see that for the past 2 months, it has been respecting the central pivot range pretty well. This is the CPR, holding well at this, and right now holding well at the upper range of the central pivot range over there. Okay, all right. So if you actually remember what I said last week, I don't know how many you actually remember what I said last week. I said that last week, okay, I said that I'm more gravitating more towards the bullish side of things. So last week I mentioned about this DP gallery. Okay, this is from stockcharts.com. So at one glance, it gives you the trend, condition, breadth, and sentiment and such. So I specifically mentioned about the market breadth, the percentage of stocks above their 20 days, 50 days, and 200 days moving average. At one point in time, the market breadth was actually very high, at about 80%. So it actually dropped down, So for the 50 days also dropped down. 200 days, I think is fine because most of the time, if the market is in a really bullish market, it tends to stay elevated at 200 days moving average because, conventional if you're an uptrend, you should stay above the 200 days moving average. But after that, the market does drop a little bit. Okay, even though on the surface the S&P didn't really drop a lot, the small cap and mid cap did not actually move that a lot. But again, that poses also a problem also. Okay, typically when the market is going to drop, normally it's the small cap and the mid cap that so-called drop first. beneath the surface that you won't know while the big cap S&P is still going higher. So that could be the possible scenario, okay? But all in all, what I was trying to say that, the market do have some correction in the background, okay? Even though you might not be aware of, okay, the S&P continue to go higher, okay? But this is not the key thing, okay? The key thing is that, remember what I say? I'm not sure whether you can remember. I say that this McClellan oscillator over there, okay, it looks a bit strange to me, okay. Last week I said, hey, the market kept going higher, but the McClellan oscillator was at a low last week, okay. It was at a low last week, okay. So if you zoom in to this McClellan oscillator, typically, can see that don't look at this extraordinary level, extreme level over there, okay. But typically, when it is at about minus 60, minus 70 over here, over here, okay, it tends to form a swing low, a market low over there, okay, somewhere around here, okay, about minus 60, that kind of thing. Remember or not? If you remember, okay, just type yes, okay. If you remember about this McClellan, I said that let's see whether this coming that was last week, okay, whether that market can continue to go higher. So in fact, it really went higher. It really went higher, okay. So this is good. So right now we are actually based on the McClellan oscillator. We are actually like midway zero, okay. It is not extreme level at a high or at a low. So market can still continue to go higher, okay. Unless you are permanent bear, okay. Only Christina remember only, the rest cannot remember, is it? Okay, never mind, okay. So this is the one that I mentioned. So this is the McClellan oscillator. All right. So, okay, but I also do want you to be cautious. So I think previously I mentioned that I think 1 or 2 weeks ago, I think 2 weeks ago, I said about typically leading to the election day, okay, typically leading to the election day, the market the VIX tend to spike, the volatility rises ahead of the election. When the big spike typically, which means that the market tends to go down lower. So you can see that over there, when the VIX really spike, it is about 2 weeks before the election. So right now we are somewhere around there, okay, okay, just to take note, okay. And a few factors, okay, as I mentioned, the OPEX is actually the OPEX, it is actually on the 18, right? 18, right? Remember this day, 18th of October, which is this coming Friday. Okay. Hey, hello, Henry. Hello, Yang. Okay, 18th of October. Okay. So I also want to add in, where is it? Sorry, let me try to find the thing. This is the, oops. This one, I think I mentioned before also. This is the seasonal trend of S&P over the past 13 election years cycle. So this is not 13 years, the election year cycles. So every 4 years, election year cycle, total about 50 years. Okay. So it is right now, it is playing out according to the playbook. Can you see that? October, okay, tends to go down a bit lower, going higher, okay. So October, so you can see from the S&P 500, okay. So it is according to the playbook. October, okay, go a little bit lower, okay, all right, and then stagnate a little bit, come down a little bit lower, and then going to go higher, which is exactly what it is happening right now, okay, all right. So if we were to see that if the market is to peak, okay, it is somewhere around here. Okay, here you can see my cursor. It is somewhere around 20th of October. If it is to play out, okay, 20th of October, then you need to be a little bit more careful, which coincide, okay, we coincide with the options expiry. A lot of times when the market, the option expire, okay, after that, if the market really do have some weakness, typically it's after the OPEX week. Plus, okay, as I mentioned, right, these the VIX tends to, before the election, tends to have some volatility. Okay, so which means my view for the market right now, okay, at least I think we still have maybe, I don't know, maybe about 1 week of bullish opportunity. 1 week of bullish opportunity. So you can see over here. Okay, what is it? Okay. 1 week opportunity, okay, until about 20th of October. Again, it doesn't mean that it's going to fall on 20th October. It might not fall also, it can continue to go high. I'm just saying that if it is according to the playbook, okay, it'll be about 20th October. Can you just type 20th 20 in the comments lah, okay? Again, I need to repeat, I'm not saying that the market will like follow exactly the seasonal data. Seasonal data is just like to tell us what happened in the past. We still need to watch the price action now, okay? So my view is that, it is maybe going to maybe frustrate the bears a little bit more, okay, going higher, okay, and to trap some of these bears thinking that it continue to go higher and then the market will come down. So maybe after next week or so, after 20th lah, okay? So that is my view. So my view, again, I repeat, my view is that I am still bullish, okay, heading into 20th of October. Okay, so 18th, 20th, that kind of period. After that, okay, then I'll be a little bit more cautious. Don't be aggressively, going long. And if you have profits on the table, to take some profit off the table, take partial profit or to trail and protect your profits. Clear so far? Again, okay, this is just my personal view. I could be wrong, okay? I just type okay in the comments or not. Can or not? Okay? Can just type okay in the comments or not? All right. So this is just my personal view. So yeah, I'll be watching this closely. Okay, which means that heading into November there'll be a sell-off, a correction. Okay, and then after the election there could be another correction. Okay, again before we go higher into the year-end rally for the Santa Claus rally. But again, you can see that the market might not be so smooth. Okay, but overall we are still in an uptrend. So my personal take is that yeah, until about OPEX 20th, be a little bit more careful. Right now, we still have a very short window of opportunity, bullish opportunity right now, but don't be too aggressive because a lot of stocks has already run up quite a bit already. For example, like big cap like Semicon, SMH are all going quite high. Okay, of course, if you don't compare to a previous one, but in recent 1 or 2 weeks has been going higher, that kind of thing now. Okay, S&P, it's also going higher, that kind of thing. Okay, clear? All right, so this is my personal opinion, and let's head into this. Okay, okay, just to talk about some of the previous trade ideas. Okay, I am not sure how many of you actually remember this. Okay, I think quite a number of weeks ago, I said that the dollar index, okay, again, this is based on the seasonal data, okay, for my SVI, Seasonal Vantage Insiders, bullish 19th of September to 4th of October, 10 years, 100%, okay. I know there are some few SVI who took advantage of that. At least they told me, okay, personally lah, okay. Maybe they are too shy to post it in the Telegram group, but there are a few, okay. 19th September to 4th of October, okay. So you can go to DXY dollar index. Dollar index, it is DXY, okay. So I actually plot it out, okay. 19th of September, okay, to 4th of October. This is the one, okay. Can you see that, it runs down a little bit lower? As I mentioned, it is not 100% on the dot itself, but somewhere near. And based on the price action, you can see that actually, if you look using other indicator, you can see that there's some bullish divergence already. Okay, or it's going higher, but there's indicator is forming a higher high. But nevertheless, you can see that after that, it grind out a little bit lower and then boom, go higher. Okay, yeah. So again, this is once again a 100% track record. So this year, adding into that, right, will be actually 11 years track record already. Okay, how many of you actually took advantage of the dollar index? Okay, let me know lah. Okay, don't be shy. Okay, if you manage to take advantage of this trade ideas, just type DXY in the comments. Okay. But again, I think maybe some of you guys don't trade Forex, but personally, I do not trade this. Okay. It is okay because I have a lot of ideas, but I cannot take every single one of them because I have in some other stocks. Okay. Oh, Ian is managed to get it. Okay. Zihao, yeah. Zihao is one of them who told me. Okay. Fantastic. Okay. So this is the one. If remove this. Okay. Yeah. So there were in fact really a few. Okay. And last week, okay, last week, what did I mention last week? I think only I mentioned about one or two things last week. What did I mention? Just now, Wylam was mentioning about what asset class? Okay. SPX, doesn't matter lah, okay? So at least got one Zihao, okay? All right. Okay, so it is the Bitcoin, right? It is the Bitcoin last week. If you cannot remember, you can refer to last week video. So I mentioned about BTC. So once again, I say that, we are somewhere around the favorable period. Of course, I didn't mention the exact date, but we are somewhere around here. Somewhere around here. I just do like that, somewhere around here. And I say that, we are right now into the cloud, okay, and also central range, okay. And based on the order flow, okay, it seems like, there's some bullish order flow inside, okay. And after many months of, correction, okay, it seems like, somewhere around there. So when I first mentioned, okay, it was here. And then there were a few days of correction, okay. But again, I actually mentioned to my SVI that it is more for a position trade. So for me, this is more to hold longer term, at least 3 months and above. So yeah, it is not like a swing trade holding for a few days and I have a zilla. So again, I'm not saying that it is going to continue to go higher. Nothing is 100%. Okay, so don't put all in case you think, oh, Alex said that you're going to go up. I didn't say that. Okay, I could be wrong. If I'm wrong, I will just exit and I will still be fine. Will you be fine or not? That's the question. Okay. If I exit, I will still be fine. But for position trading, okay, I tend to put a slightly bigger position. But again, this is something that once I'm wrong, I exit, I can still sleep, okay? But again, so for position trading, right, your timing doesn't need to be very precise. Timing no need to be so precise like swing trade, okay? Like, wow, you specifically need that price to enter, okay? No need to be so precise. But again, you don't come and ask me whether, oh, right now, is it a good time to enter or not, okay? I mentioned last week already, okay? It is your decision to decide. I'm just sharing my education, my ideas over here, okay? But if ready price doesn't go up higher and then suddenly there's a sell off, okay, about 52K is something that I'll be watching out, okay? About 52K is something I'm watching out. So if price really do broke below 52K, sorry, do break below 52K, then I'll be a little bit more worried and I might exit the Bitcoin. Okay, so this is my personal view. Again, I could be wrong, right? This is just some of the things that I look at, and I think that personally, I do have a position in Bitcoin. Okay, yeah, and for those who are not crypto native, you are not so not so HODL Lamborghini, that kind of lingo. You just typically a stock trader, but you might want to take part in the Bitcoin. You want to, okay, there are a few alternatives. Okay, one is to actually do the Bitcoin ETF. I think the highest, the biggest AUM, asset under management, is actually IBIT. Okay, IBIT. This is one of the Bitcoin ETF. If you are looking to, maybe you prefer Ethereum, then you can look at ETHA. This is iShare Ethereum Trust. Okay. Again, I'm not endorsing any of them. I'm just sharing with you what could be done if you are really not into cold wallet, hot wallet, whatever wallet you are looking at. Okay, you can look at the ETF to participate in some of this crypto activity. Clear so far? If you understand what I'm trying to say on this Bitcoin ETF thing, okay, just type IBIT, IBT in the comments. Again, I'm not saying that you buy IBIT. I'm just saying that, you know, these are the ETF that you could be watching out for. Okay, maybe you might not know, but this is something that you know now. Lah. Okay. All right. So Ian said, I sold the wallet for IBIT. Okay. Thank you so much for your participation over there. And just another idea. Okay. So I know that just now I said that the DXY, the dollar index, is just actually within the favorable period. So right now, just another trade ideas. Okay. This time around, not so much of trade ideas, but I'm just share with you. What is it? Yeah. So again, it's sorry. So for DXY, okay, DXY dollar index, okay, from 18th of October to 31st of October, okay, for the past 16 years, okay, 81% of the time it went up. All right. So for the past 16 years, which means that of the past 16 years, 13 years, it went up. Yeah. So it's only about 81% plus. Not higher than 90%. So the win rate is not exactly the best, but I think it's still okay. Dollar index. So I think it's still okay. So you might want to, I don't know, this is just another idea for you. You trade Forex or don't know what. Okay, you can take a look at dollar index, which means that, you know, right now, price can continue maybe to go higher into until the end of the month or so. Okay, I don't know. So, you know, you can trade the dollar yen or euro dollar, that kind of thing. Okay, whatever it is, okay, you can treat it something to watch out for. Again, I'm not saying that you definitely go up. This is just based on seasonal data. It is up to you how to interpret the data, how to watch the price action, but this is something to you. Okay. All right. So clear so far on the dollar index. Clear. Okay. PL Lee, what is your advice on crude oil? PL, are you a SVI member? If you are from SVI, right? Okay, you should know what to do. Okay. How many of you here are from SVI? Okay, can just type you profit from SVI previously. Okay, from crude oil. Okay, just type SVI in the comments now. Whether you are profiting previously or shorting now or whatever it is, okay, just type SVI in the comments, okay? SVI. So for crude oil, okay, yeah. Not yet means are you keen to join? Keen to join, then you know the answer lah. Okay, anyway, okay, for crude oil, okay, yeah, I'll just share with you here. Crude oil previously, when I first mentioned, okay, it was somewhere around here. Okay, it was somewhere around here. So we had a lot of these members have a good run, okay, in the members sharing over there. So this is the member success. And someone trade Calvin trade natural gas. Okay, like previously, you can see that a lot of trade, for example, XOP, energy sector, energy, XOP, energy. So we did quite well on that. Okay. Again, I'm not saying that it is going to be right for me. I'm just saying that right now, okay, this period, okay, crude oil based on seasonal data, it is heading down. It is heading down. Okay. Yeah. I won't tell you the exact date. So for SDI members, you know the exact date. You know the exact date. Okay. Yeah. So somewhere around there. So you decide. Okay. But from what I see, crude oil. Okay. First of all, I don't like this pin bar over there. I think most of you know that I don't like this hammer candlestick pattern or pin bar. Once again, don't come and argue with me whether this is a doji or whatever things. Okay, whenever you see this thing, you should know what I'm talking about. Okay, the long wick, a long shadow with a small body at the top. Okay, this is like a hammer or a pin bar. So I do a naked chart over there. Okay, so you can see over there, price starting to go down lower, then go higher. Okay, and typical technical analysis, okay, tell you that, oh, this is the horizontal swing high. This is the resistance level. Okay, break out, come back, retest, and now this become the support level, and then we have a hammer candlestick pattern. Okay, maybe it's time to buy. It is just like a lot of YouTubers tell you, this is a change of trend, break above the resistance level. Right now, we have broke above the resistance level, come back, retest already. This is a hammer candlestick pattern. This is a bullish candlestick pattern, or it's a good time to buy right now. I say, these guys, I think, do not know how to trade. I believe this guy don't really trade because previously I tried this kind of method. It doesn't work for me. Okay, it doesn't mean that it doesn't work, but I feel that it is just 50%, 50%, 50-50. Okay, sometimes it works, sometimes it doesn't work, and most of the time it doesn't work. It just trap you to buy, here. Okay, and then then price come down again. So let's say if I can't guarantee it is going to be like that. If really crude oil wants to go higher, I believe the price action that you do, okay, is to come down, okay, clear out the stop over there, okay, and then go higher if it really want to go higher, because a lot of traders, especially those swing traders, will just place their stop loss just below the low of this pin bar over there. So there is a lot of open order there. Okay, open order there, which means that they have a lot of limit sell order there. Okay, sell order there. So in order for people to buy, somebody has to sell to them. So let's say if the big boys, the smart money want to push up, there's a good chance that price go lower and test again. Okay, clear up all the sell orders, they buy up and then push higher. One scenario but again, I don't know. But based on seasonal trend, okay, it is like that. Okay, so yeah. Okay, clear so far on this. If it's clear on the crude oil, just type CL in the comments. Just type CL in the comments. Okay. All right. So we are just about 55 minutes. Okay. If you enjoy the sharing so far, if you find value and you learn something new, okay, just type letter V in the comments. Just type letter V in the comments. Okay. And of course, if you have any question, I can still take in a few questions, okay, before I end the day. Okay. Aden say STI, you are hardcore STI supporter. Okay. STI. Where is it? STI right now, let me take a look. STI. Based on historical seasonal data, the STI, let me try to put in my chart, okay, tends to so-called a bit weaker until the end of the month. Okay, until the end of the month. Okay, can be choppy. Okay, if you really like want to buy STI, maybe somewhere towards late October or early November, then you can look for a buy opportunity Okay, buy opportunity somewhere around here. Okay, but as of now, I think STI actually looks pretty strong to me. So STI is like starting to wake up, like a laggard starting to wake up. Of course, maybe being affected by the Hang Seng and the China market as well. All the Asians stock market is like waking up, that kind of thing. So I think STI is still looking good, but in terms of price action and seasonal data, somewhere typical towards the end of October to November lah. Okay, all right. So Mark say you can buy ETHE. Yeah, ETHE is also another ETF. Okay, yeah. So there are a few actually. There are a few. All right. So IB is not the only one. Okay, there are also a few, but I'm just sharing what I know. And once again, thanks Mark for sharing. So you can choose ETHA or ETHE, like what he say. It has a longer charting history than the ETHA. Hey, hello, Koi. Okay, just now never say hi. Okay, all right. So, any other questions so far? Any other questions so far before I end the session today? Okay. NVIDIA and Tesla. NVIDIA and Tesla. I typically don't like to cover this hot stock because they are like the market itself already. NVIDIA and Tesla might as well just buy SPX lah. It is the same, you see, because they are the market. They are so big. Yeah. So again, my idea is that because SPX, they can maybe one more week or so until the 20th of October. So same lah, NVIDIA or Tesla, maybe another one more week or so lah before my view turn more of the bearish side of it. Bearish doesn't mean that I'm like waiting for the market to crash. It's just that I'm anticipating that there could be some correction. Okay. All right. So I think with that, I think not much question coming in already. So with that, thank you so much for staying with me. And I hope you guys have a good weekend. No, good weekend. A good week ahead. So with that, okay. Thank you so much and bye-bye. Say type V if you find value for those who haven't actually typed, okay? And also give me a like, share, and comments if possible. All right. Do share. Thank you and bye-bye.